All right. Well, it is just right after the top of the hour, and we have a lot of people coming in, but I think I'll just get rolling to respect everybody's time that's here. Happy 4th of July for all of you that are going to have some fun this weekend, sharing of celebrating that. Um, just wanted to give you, for those who haven't met me before, don't know about us, I am Marilyn Wilson. I'm the founder and CEO of WAV Group, and also the president of RE Technology. If you are part of an MLS that does not yet have RE Technology, we should talk about that too, because we can get that to you very affordably. I am also the immediate past chair of the National Small Business Association, which was a very interesting, is a very interesting experience to see how Washington works on behalf of all small businesses, not just our own. Um, and I was formerly CEO of a software company, graduated from Cornell. If we got any Aggies on the call, nice to hear from you. And just want to tell you quickly about us as a company too. So we are a company that really prides itself on trying to make things better for everyone, right? But we interface with MLSs, associations, brokerages, technology companies, mortgage, a lot of stuff with consumers. So we try to bring all of those perspectives together in the things we talk about today, but in general, in terms of how do we make every one of our companies within the ecosystem, sort of considerate of everybody's needs and making all of us more relevant because we do that. And it's not just me at Wave Group. We got a whole team of people that do everything from PR to technology to broker valuations and mergers and acquisitions, marketing, a whole bunch of different things. So we have a really full team. And again, when you're seeing things today, you're seeing them reflected of all of the perspectives and learning and projects that we work on as a group. It's really exciting. So let's just start with the economy. It's always good to kind of look at what world are we operating in these days, right? And there's some great charts here, I think, to just give us some perspective on. So what are people saying about this year? You can see that the forecast is, I'd say, relatively conservative for all. Zillow's a little less bullish than others, but it's going to be I would call it maybe a solid, consistent year. We're not going to have those years that we had in 2020, 21, where it was crazy, all kinds of growth. Looks more like a more traditional types of, regular growth forecast. And existing home sales, NAR is a little bit more bullish than others, but again, they're all, I'd say, relatively consistent. Dare I say it, we're sort of moving back to more of a normal market, which is exciting. Um, and then mortgage rates are holding, they're very consistent. The Mortgage Bankers Association, NAR, and Fannie Mae are all pretty much saying we're in the sixes this year. So I think there was a hope that it was going to start to drop below that this year. Good news is it doesn't look like it's going up, so that's great. And if you may have heard that the president's been putting pressure on trying to see if they could lower interest rates and interest rates, which would lead to mortgage rates. I don't know if he'll be successful at that, but this is where we are at the moment. And this is, I think, kind of encouraging news. We just saw this from Realtor.com that for May, specifically, there's almost a 21% year-over-year increase in inventory. And I don't know if you can see all these colors. They're kind of confusing, but I'll just explain them to you. So the blue is 2020, 2017, red is 2019, this orange is 2018. So these are years when, things were pretty good. We had 5 million plus, pieces of property to sell. And you can see that's starting to track up into that range, which is really encouraging compared to the ranges down here, which is the 22, 3, 4, the years that we've been in historically, or I should say the last several years. So good news. I mean, maybe there's some hope here that realtors are going to have more to sell this year, and at prices and within a market that's not so crazy, maybe feels a little more accessible. So I think guardedly some good news happening all the way around. So that's exciting. And then looking at, some other indicators that we've always worried about. So the delinquency rates, according to Fred, are still very, very low. You can see they've ticked up maybe just slightly in the last year or so, but they're still way, well below they're 1.7% or something like that. Nothing like the days when we all remember the 90s and back into the early 2000s when it got crazy. So that's all holding. People are not losing their homes right now or not getting way behind on their payments, which is great. This is interesting too. The apartment demand has really exploded. If you look at Q1 2025, the dark blue here, the one in the way high bars, that's annual demand for apartments. The green is annual unit starts, And the demand to starts, which is that yellow line, you can see that we're kind of out of whack, right? So there's a lot more demand than there is supply at the moment. We have seen building kind of slow on apartments. So that may be kind of what's happening there. But the apartment business is still strong and will continue to be. So any of you that have, rentals in your MLS or association or are focusing on that type of thing, you're probably going to see a continued demand for those types of activities. And then, this is the one I always like to show last, and this is really good news, that the real estate equity, this is equity from back from the 1950s all the way forward. Anytime someone says, is it a good time to buy? I just show them this chart and say yes. So it might jiggle or jaggle a little bit, right, for a couple of years where you might feel like you're not as high as you were, but over the long haul, if you think about a way to create generational wealth in your family, there's absolutely no better way than real estate to do that. It outperforms every other type of investment vehicle. So this is always, in our worst days, come back to this chart, right? That at the end of the day, we are doing something really, really special and important for our country. Okay, so flipping over, I don't have as much doom and gloom today as I usually do, which is good, I guess. I don't know. But we still have some more existential threats facing us. Of course, we're through the settlement for the antitrust. There are open MLS lawsuits, which we'll talk about in a little while. But there's another one here that I think is, if this gets any traction, is one that is definitely one we all need to pay attention to. So we've done research, and we're about to field it again, asking a variety of things of realtors across the country. And one of the questions we asked back in late November is, do you believe it's fair that you're required to join the NAR if your broker is a member? So this is to an agent question, right? 42% of them believe that it's not fair, that they have to join because their broker has joined. And so there's a lawsuit that has just come out in California where a real estate broker has sued NAR over its policy requiring brokers to pay dues for all of their agents, even if they're not members, right? So this is the concept that if you're a broker, you're a realtor, everyone in your company has to be a realtor, and if the agent, are not willing to pay for it, you have to pay for it through the thing that's called the variable or the dues. I always call it the dues formula. I guess the official name is variable dues formula. And so this is basically brokers questioning, why does everyone in my company have to be a realtor just because I am, right? And I'll use a dramatic example of any type of club. If I'm a big leader in the Lions Club, do all of my agents have to come with me on the Lions Club? Of course, it's not a trade association. It's not the same thing, right? But this is the gist of what this broker is saying. And he's saying particularly for smaller brokers who have less revenue, less profitability, that putting that burden on them to have to pay for all of their agents, even if their agents don't want to be part of NAR, he's not liking that. And I can tell you, I've talked to a lot of brokers, not about this lawsuit specifically, but about this concept. And many of them will tell you, Marilyn, I don't have enough margin in my business to give my agents what they do want from me, never mind what they don't want from me. And I really don't think this is fair, right? So will this get any traction? Will this go beyond this? I don't know, but it is something important. And what I would say to anyone that's on this call that's part of an association is the absolute most important thing you've got to think about right now is how you are communicating and driving home your value proposition, right? If you have a lot of members that are sort of like, it is what it is. Yeah, I joined it, but I don't really know what I get out of it or whatever. And I hear a lot of times people understand what they get from the local, but they don't understand state and national. And some of them still don't understand they're all connected, which is interesting. But you really need to think about that, about how are you going to work with each of your brokers and help them understand the value that you deliver to them with education, with advocacy, with networking, with professional development, all of that stuff. If they don't understand that, and this lawsuit comes your way, it could be more problematic, right? So definitely think about what you're doing to drive that home on a regular basis. Communications is absolutely the single biggest thing that every company suffers from, right? But particularly if you're in a situation now where people are questioning why they belong or the value of why they belong, you really have to think about that. Okay, so we're going to flip over to some other topics. So the broker public portal, I'm not sure how many of you are aware of what that is, but I'm going to kind of just give you the quick overview of this. This is a program that started, I want to say 7, 8 years, maybe 10 years ago now, a long time ago. And it was started by a group of brokers and MLSs that said there's got to be a better way for us to work together to provide business opportunities for every one of our agents without having to let third parties sort of take that initiative over, charge us significant referral fees or advertising fees. There's got to be a better way to do that. So that's kind of what drove it, what started the whole concept many, many years ago. Now they're back at it again with a new round, and I wanted to kind of give you a quick update on that. So for those that aren't familiar with the Broker Public Portal, it's a really interesting group because it's first owned and governed by brokers and MLSs together. I think there's maybe about 110 investors or something like that. And the whole idea is that we wanted to figure out ways to leverage that MLS data to the benefit of those that provided those listings and that are part of the family, so to speak, right? The other really exciting thing about it is it doesn't have a profit motive, right? So all of these third-party public companies that are trying to grab the consumer and get them to engage with their site, they all have a profit motive, right? They're all trying to sell advertising or referral. They're all trying to sell something. And while many of them publicly will say, well, we do exactly what the consumer wants. We're driven by the consumer. The truth is their revenues are driven by each of you, right? They're driven by practitioners. So there was some exciting news this week that just came out. Dorify MLS in North Carolina just was the latest round of investors. In fact, I think most of the investors currently in Broker Public Portal came in 10, 7, 8, 9 years ago, a long time ago. So we're thinking this is the beginning of a whole new round of investment and engagement. And Dorify is very excited about it because they have a strategy or philosophy, as do many progressive MLSs now, that they kind of want to control their own destiny, but on behalf of their brokers, right? So they want, if they collect data, they want to be able to collect it on servers that they own and control, right? If they want to distribute or promote information about it, they want to do it in venues that they control, right? So that we don't get those folks coming in the middle trying to siphon data or siphon profitability from all of you, right? So, and in his case, he manages, controls, and distributes data for brokers. He has his own database system. He has his own listing input system, all kinds of things that are very, very interesting. So we're thinking this is the beginning of another round, like I say, of MLSs either recommitting and getting excited again, or those maybe coming in that never did before, because the strategy is a little different this time for Broker Public Portal. So for those that remember it, it was actually launched under HomeSnap, right? So some of you may have had the HomeSnap app, or you had a HomeSnap little framed in website, for a little property search on your website, MLS website. But this one is different. This one is being built completely, again, independently, right? It's built with the guidance and input and approval of brokers and MLSs that are there to drive the business model, to drive the functionality, to drive everything, right? It's not a third party. So what they've done this time, which I think is really neat, is one of the things that people didn't like about the last round was that HomeSnap was the brand, right? If you were going to be part of that, you had to only use their brand. And if you had your own local website, you couldn't brand it HomeSnap. It was like its own separate thing. So this time around, they're doing some really interesting things. So if I'm an MLS that hasn't, or even an association for that matter, that has not had my own website or doesn't want to maintain one or doesn't want to just go through the work of doing that, you'll be able to tap into this national site, and you'll be able to, use that, and that could be in it. I'll show you just the homepage of the beginning of it. It's really, really good looking, I think. But anyway, so you could do it that way, or if, and like many of you, I know I see Debbie on the call today from Maine as an example. They have a very strong website that they've curated themselves under the name Maine Listings, right? So it's a local URL, and I'm sure many of others on the call have those as well. Now, if you would want to take advantage of the great functionality and a lot of the great work that's being done, and frankly, the millions of dollars that are being spent that really no individual MLS could afford, you can actually use what they call their term is search as a service. So you can take their website, take all the search functionality, which is the most complicated and the most expensive to build, and then surround it with whatever you want. So if you want your own brand, if you want neighborhood information, or your own agent information, anything that you want that you think really makes your website special, you can do that. So they're going to basically be not only a website, but importantly, they're going to power other websites, right? So I think, and so it lets everybody that has their own brand keep their own brand. Everybody that loves their website, loves their look and feel, lets them keep all of that. It's really, I think it's a lot more flexible and frankly, a lot more in tune with the way we work in our industry today. So there's you guys can go check this out right now. This is still on a quote test server, but the URL is brokerdata.com. That is not the real URL. It's just kind of test data. And it's got Charlotte information in it right now. So you can click on some of those things and you'll see it. You'll see that this thing is just as contemporary, in fact, more so in many cases than some of the leading portals that are out there. It looks gorgeous. It works in lightning fast mode. I've seen it work in, when you go to the hotels, like the conferences and nothing loads because it's so, the internet's so bad. Even in that environment, this thing is like rock solid. It comes in really, really quickly. So there's a really cool tool coming along here. So if any of you are in markets that have invested, you might want to reach out to Dan Troop and he can tell you more. If you're in a market that has not yet or wants to learn more, again, Dan Troop is your guy. Just call dan@brokerpublicportal.com and he can tell you more about it. But I'm super excited. I think the second time's a charm, so to speak. I think they've really got it figured out this time. It's super exciting. So anyway, that's big news. Okay, so here's something that we're experiencing here at WAV Group. And many of you may be thinking about this yourself, but there's been a surge in MLS in the interest in MLS valuations. And we're very lucky here at WAV Group because we have a gentleman named George Slesser, who is actually, if you all remember when Realogy was formed, right? They rolled up all those different companies and created that holding company. He bought all those companies to create that holding company. So he's bought and sold something like, I don't know, 1,200 real estate firms. He's very, very in tune with what we do in our industry. And he also has done, I think, probably 2,500 valuations. So he's really good at this, right? So we've kind of gotten into it just because we see MLSs need help, and he's just frankly the best at it. Probably has more experience than anyone else in the entire country. But why is it happening? What's going on with this? So those of you that have been around probably remember that RE Colorado, which is the largest MLS in Colorado, was sold by its two shareholder associations to a private firm, not even another MLS, but to a private entity, kind of in the cloak of darkness. Frankly, still has kind of a lot of cloak of darkness around it. We don't know exactly how it works. We don't know if there is a board of directors. I don't think there is, but I'm not sure. There's a lot of things about it. So it's driven a conversation, I think, in a lot of boardrooms about, should we think about that? Why would we think about that? Right. So I wanted to just kind of give you some perspective of what I'm hearing out there in case you are having these conversations and might want to, put some meat on it a little bit. So what's in evaluation, right? Most companies don't do them. I would say, to be honest, that we probably always should have been doing them. It's just kind of a financial best practice, especially if you're a shareholder, to know how much your asset is worth, right? You know how much your building's worth, you know how much your equipment's worth, but how much is your MLS worth? Many people didn't. So in the valuation, we look at the financial trends, we look at subscriber count, consistency of that subscriber count, the types of technology and the depth of service, the customer satisfaction scores, if you have those available, the amounts of collaborations and other things that you're doing, to help your brokers. And all of that leads to an evaluation that leads to an actual number of it's worth between this and this, right? It's not an exact number because, of course, like homes, they're only worth someone's willing to pay for them, right? But it gives you a good financial objective number to understand for yourself and if you want to do anything. So this is really the first thing, is that a lot of people are just getting it to just know what they've got. And I think some have been very pleasantly surprised that, we kind of take the MLS for granted, that we've just always had it and it is what it is, but they're actually pretty darn valuable organizations. And so what are people doing with that number, right? Some are just holding on to it, like I say, but then there's a bunch of other people looking at it for different things. So some people are saying, well, what if I just sold my MLS? And again, this is a lot of times shareholder associations, right? And some are saying that because they might really like the value of that asset that could fuel growth and excitement within the association. Some are like, well, a lot of these lawsuits that have come and may continue to come are coming from the MLS. Maybe we should just get out from under that and get rid of that risk. So there's a lot of different thoughts, right? And I don't know anybody that's actively trying it. I'm sure there are, right? But there's nobody else yet. But this is one of the considerations that people have. Um, Here's another one. So if let's say there's two organizations right next door, you've thought about somehow merging together, you're not sure exactly how to do it. But let's say I'm going to use, not real numbers just for argument's sake. Let's say one association's worth $1 million and there's another association and they'd like to buy into that MLS that's worth $1 million. The $1 million MLS can actually like issue shares and say how much is each share worth. And then if another organization wants to be part of it, they can actually buy in. It's kind of like how law firms work, where you have to, if you're a partner, you kind of put your equity stake in, kind of like that, right? So instead of just merging, and I think sometimes there's a discomfort that if a bigger one, if a little one merges with the big one's going to take them over and they're not going to give them the respect they deserve, et cetera, et cetera. If you come in and you're actually an owner of the company, and you've put money in to make yourself an owner of the company, the dynamics may change, right? So that's one thing people are looking at. Another one they're looking at is, wow, I got a big asset sitting there. It's all paid for, right? It's just like a building. How can I borrow against that? So, hey, could I build a new building? Could I buy some MLSs? Could I invest in some AI thing that I've never been able to do before? Could I spend more money on advocacy? Whatever it might be, right? But the point is, you know how much it's worth. You can go to the bank and say, I have this asset, I want to borrow against it for whatever reason you might want to. Um, and then some are, like I say, are using it to, if our MLS is worth this much, it's worth investing in, because if we invest, it'll become even more valuable. So they're looking at it to do that, right? Is to say, I might want to invest in BPP as an example, right? Or whatever it might be. I may need money to do that. I'm gonna borrow against that so that I can do it. And then so those are just a few, right? There's all kinds of different spins on people's thinking about, why would I even think about selling my MLS? Like most people, until that RE Colorado thing came around, had never even thought about it, right? But as I've been talking to more and more people, here's things I think you need to think about, regardless of which strategy, right? So the chances that someone may come knocking on your door, given that RE Colorado got a lot of press and VCs, venture capitalists saw it, and equity companies saw it, and banks saw it, or whatever, it's possible that someone might come to ask you about it, right? So what I'm highly recommending is that you think through which of those strategies, or maybe it's a collection of those strategies you might be interested in, but you also, in a quiet time before someone's knocking on the door, think about, under what circumstances would we actually be willing to sell, right? So here's a to a venture capital firm. We can sell it to an MLS that's across the country, not even next door to us. Like there's a lot of different people that might be, maybe technology companies. I don't know, maybe banks, who knows, right? Um, but before you do that, think about a few things. Number one, who would drive policy for your MLS, right? Today, NAR and even for independent broker or independent MLSs, a lot of the basic policy comes from NAR and comes nationwide. There's a lot of people saying, should it be nationwide anymore, right? So maybe that's okay. But if it's someone that isn't a practitioner, who doesn't really understand changing market dynamics or what's going on out there, would they be capable of driving policy? So who would do that, right? Who would approve pricing? Right now, well, I'd say all MLSs are very affordable, right? Relative to the other types of technology that you must invest in today. Just think about your phone bill versus your MLS bill. Like it's a lot more, right? So who would approve pricing? What if it's, right now it's, again, not using real numbers. Right now it's $10 a month and someone decides, no, it's going to be $1,000 a month or $100 a month or even $25 a month, right? Who approves that, and who can push back on that if that price gets too high? Because in most markets, the MLS is it. There's one, right? So if I'm a broker and I need data in that market, and you decide now it's going to cost me 10 times more than it did before, I still have to pay it if I want to be in that market, right? So these are the kinds of things to think through, right? Why are they buying it? Are they buying it just because they want to take your data and sell it out the back door to someone? Do they think there's some efficiencies where they can actually deliver more value for the same price? All those questions, right? That's a big one. It's what's their motive? Who oversees it? Right now, it's practitioners overseeing it, right? Who would it be in the future? Um, would they maintain a local presence? Would they have the building that's local, or would they just like go virtual and not have any local support? And even if they did, does it matter anymore, right? Do we even need local on the ground? That's a whole different question, which we should ask regardless of this stuff, right? Um, can they offer more for the same money, or even just offer more? And how will they protect the broker and consumer data, which we know is very valuable, right? So these are just a few, right? But these are the kinds of things you definitely should think about. And bottom line, at the end of the day, will it be better for brokers and the agents and clients they support if this company owns your MLS versus the group that owns it today, right? These are the kinds of questions to ask. The answer may be yes. It's not that I'm saying you don't want to sell. Maybe you do, maybe you don't. I don't know. But that's what you got to really think about at the end of the day is this really good for the industry? Is it really good for the practitioners that you've served for so many years? So interesting conversation. If any of you want to do that valuation thing, like definitely reach out to me. I'm happy to do it. It's not expensive at all, and it's maybe a little good bit of peace of mind if you want it. But anyway, that's why we're seeing, I think, a lot of this happening. Okay, here's another one now, the renewed push for open MLS. There's a lot of this happening right now too. And I'm going to kind of just take us back to the beginning, right? So this is something that we tend to forget, that at the end of the day, what allows you to sell real estate in your state is your license. It's not your NAR membership, right? We kind of think that it's your NAR membership. We believe that, and I think we're right, that you're better when you have NAR behind you and all the professional standards and code of ethics and all the things that go with it. But the truth is, from a legal perspective, it's your license that allows you to do that, not your NAR membership. So we have to kind of keep that in the back of our mind, right? And here's another interesting point that's happened. So through all the antitrust settlements, as you know, many of the largest brokers, the $2 billion club as they're being called now, settled on their own because the NAR settlement did not cover them, right? So those brokerages rolled up represent about 650,000 agents. And in the case of everyone on the screen, they cannot at the franchise level require NAR membership anymore. Now, does that mean that the local broker and the local franchise is walking away from NAR? Absolutely does not mean that, right? But on paper and legally, they cannot require it anymore. Okay. Redfin decided to just not require it because they just decided not to, but that's since then they've been involved with lawsuits too. But 650,000 is almost half of our market, right? It's a lot of people. So what do we do if one of those brokers changes their mind and says, hey, I've got agents that don't want to be a realtor. What are we going to do? I still want them to have access to the MLS. What are you going to do for me, right? And in the data that we did, we're doing this again shortly, but right now about 13% of people said, if I didn't have to join the association to get access to the MLS, I probably wouldn't, right? So there's some percentage of people. I can say, and you guys can talk about in your own market, I don't believe nearly that many are actually intending to leave. In fact, like none of them have left. Every market I've ever spoken with, and if any of you have seen this, seen differently, I would love to hear it. But I haven't heard one brokerage that has said, we're all going. My whole market, my whole brokerage and all of us, we're going to not be realtors anymore. I haven't heard of that in any market. So it isn't playing out, but it is still out there. And there's still a lot of people not comfortable and wanting to understand, why are you making me do this to get that, right? And that's why right now there's a bunch of lawsuits. This happened back in the 70s and 80s with California, Alabama, Georgia, Florida, and a few others. And all of them at the time lost and were required to allow non-realtors to be in their MLS. So now it's happening again. So in 2024, Michigan, Texas, Pennsylvania, Louisiana, all of them now have lawsuits that are calling on the associations, the MLS, the state association, and NAR to fix this. Now, Louisiana is a good example. We worked with a group down there called the Greater Southern MLS. It's actually a broker association and appraiser-owned MLS. I don't think there's any other in the country that have appraisers as well. It's interesting. Anyway, they decided to go open in mid-November, and by the end of December, every single other entity in the state was sued except them. So they were very happy that they did this. Have they seen a whole lot of new subscribers because of it? No, a few here and there. And every single one of them that they've seen are people that were not part of an MLS at all. They might have been part of that My State, that sort of, I don't know what you call that thing, but that thing, but they were not part of any of the normal MLSs that we know. Um, and interesting, the latest advice from NAR in late 2024 was just do it. They're recommending that in light of today's antitrust climate, participation in MLS not be conditioned on Realtor Association membership. So they've been at this. They started to walk away from saying you needed that in 1994. Then they came back in 2004, and now they're back in 2024 saying it just doesn't make sense to limit it. You're just asking for another lawsuit. And so, why do people fight this? What are they worried about? Mostly it's money, right? They're afraid they're going to lose membership. And if you look at membership trends for, a long, long time, for well over 20 years, they've been driven by market need, market demand, economic issues. They have not been driven by this. And again, I'm asking people around, they're still seeing it. People are not leaving their MLS or their association because of open MLS. They're leaving it because they're leaving the industry, they're moving, they're getting divorced, they're retiring, whatever, right? All of those issues has nothing to do with this thing. And here's an interesting stat. This I got from NAR. So in April, there were 888,000 realtors represented by open MLSs, and by May, it was 941,000. So the numbers are changing significantly, and they're changing very quickly. So there's a lot of markets that are starting to say, all right, let's just do this. It's not a big deal in the scheme of things. Let's just get it done. And so what does it mean to go open? It's really not that hard. We've actually helped a few markets do this now. The first thing is you kind of have to update your rules and regs, and actually you have to kind of just review them. The code of ethics, right, is driven by the association. The rules and regs are driven by MLSs, and the code of conduct can be baked into the rules and regs, but frankly, it's pretty much already in there because a lot of the things that are involved in the code of ethics involve selling real estate, right? So it's really not, it's more of a review. It's not a big deal. You have to have a new application, right? With one, so you don't have to ask, are they a member in good standing? Because they're not a member anymore, right? So it's the same application. You just take some of the NAR requirements out of it. You have to determine pricing. Some people are just making it the same price as everyone else. Some are going higher. You just have to be super careful to avoid price discrimination because that could be another lawsuit. So you don't want to do that. You want to determine if you're going to track them. Some MLSs track open MLS or licensee onlys, as I call them, separately. Others just say, hey, they're a subscriber. I don't care what their affiliation is to another organization. So you have to decide how you want to do that. And then how you're going to launch it. A lot of people literally just put the application out there, maybe send one email and they're good to go. They don't make a big deal out of it. Some, though, are actually going after more aggressively the people that are not part of the realtor family at all. Like if there's some states where it's 10, 20, I've heard as much as almost 50% of people are licensees but not realtors. So they're saying, how do I get some of those 50% to join my MLS? Because I can grow my market that way. So it's not terrible in the scheme of things. And we're doing a lot of presentations on this right now. If you guys want to have a private conversation just with your group about this, I'm happy to jump on, just do a quick, video call, explain everything to them, and we can go from there. Okay, so now we did a couple of really fun surveys in the last few days, actually last couple of weeks that I wanted to share with you. I think they're kind of telling, and there's definitely implications for us as to how do we respond to them. So the first one we did was we wanted to ask consumers about floor plans because I've done a lot of qualitative work, like looking at website functionality and things like that. And floor plans always come up as one of the top two things that consumers want. One is flood information, and the other is floor plans. But I've never quantified it before, right? So I wanted to do that for all of our sakes. And I got to tell you, I think the results are fascinating. So first of all, we asked them, how valuable are floor plans when you're looking at a property listing? 85% of consumers believe they're very or extremely valuable. I got to tell you, I've done a lot of consumer research and I've never seen the height of these numbers. I mean, basically pretty much everyone wants them with the exception of 1%. So it's if you don't have floor plans or aren't enabling floor plans or aren't even recommending floor plans, we're not satisfying the consumer if we don't do that. And this I thought was interesting too. Does a floor plan make it easier for you to envision living in a property, right? So can I look at it and kind of more engage and dream a little bit about it, what it might look like? Pretty much yes. 93% of people say yes. And the people that we're talking to, by the way, are people that are in this survey are buyers. Okay. Because we wanted to see, they're the ones that would be leveraging this, right? How much more likely are you to take a closer look at a listing if it includes a floor plan? 56% said much more likely, and 39% said somewhat more likely. So it's definitely one of those things that differentiates your listing at some level. And this one I thought was fascinating. So how would you rate the professionalism and customer centricity of those agents that take the time to measure the room dimensions of a home and include floor plans on their property listing versus those that do not, right? Because we know consumers want this. Are agents taking the time? And guess what? 87% of respondents believe listings with floor plans reflect favorably on the agents that are representing those houses. So, I mean, this to me is again never seen data like this. It's like, of course, it's a no-brainer that floor plans should be on properties. I'm going to share this with brokers too, because if they don't know that, they need to know that too, right? So then we asked them specifics. How valuable are each of the features? So the first one was measurements and overall size of lots and acreage. 89% said that's extremely or very valuable. The overall layout, 89%. Specific room dimensions, and that's one that I know a lot of markets shy away from specific room dimensions for a lot of different reasons, but 87% want that. Overall square footage of the home, 89%. You see what I'm saying here? Like it's pretty much, yes, we want all this stuff. These were a little less popular, but still, pretty strong. Ability to walk through the home in sort of a 3D floor plan. So still strong, but not quite as strong. Property measuring standard published, so you know that the floor plan is accurate. So ANSI standards and things, there's a couple of states that actually require you to use ANSI standards. We may want to look at that as an industry and say, can we do something where floor plan measurements are more consistent, more reliable, and done in a way where consumers can really trust them? And then even there's some emerging technology that's kind of fun that lets you take photos of your furniture and things and you plop them into the system and it actually places them virtually in the room. You may have seen that some of the paint companies do something similar to this right now. So even that about just over 60%, 6 and 10 are interested in that. So I'd say the word I would use is they're just absolutely ravenous for floor plan information. So if you're not doing anything about that, definitely something to think about. And this one I think is the most telling. How strongly do you agree with the following statement? The real estate industry should require floor plans on all home listings online, and 82% of people believe that's the case. So I don't know if you've heard, but there's a couple, Megan McFarland out in Albuquerque and Kim Everett at Wardex in Arizona. They've actually required floor plans. They did that a few months ago, and I'm hearing really exciting things from them, which we'll get you back on once we have more details. But they're seeing things like days on market go down. They're seeing time on site going up, where people are actually looking at properties more, longer and in more depth than they were before. And is it all because of floor plans? It's hard to tie that causation, but they're seeing some really encouraging things. So again, if you haven't, looked at floor plans, there's a bunch of people that have one. Kubokasa's got them. They're free for MLSs. Zillow's got some stuff. There's a bunch of people doing things, but Property Panorama is another one. So you may want to take a look if you haven't paid attention to that, because clearly it is something that consumers absolutely want. And if we can enable our agents to deliver that, of course, that's what we're here to do, right? To help them engage people more effectively. Okay, so we also did one on climate change. And I probably shouldn't use that word climate change because it's so politically charged these days. But we were really trying to understand from a homeowner's perspective, you could see that they might, while they know that there may have been some kind of a weather issue or some kind of a natural disaster in their area, how willing are they to share that information? Because, and how worried are they that it may take down interest in their home or the value of their home and things like that. So a lot of these studies have been done with buyers, and the buyers, of course, want everything, right? But we wanted to hear from the people that actually own the properties. How do they feel about it? And we literally just finished this a few days ago. So you guys are the first to see both of these studies. So first was we asked them, how long ago did you purchase your home? So it's a whole range of people that are brand new to been in it for a while. And we wanted to know, did you check the flood zone status of your home? Because when we talk to buyers, they really, really, really want flood zones to be shared. And so about half people said that they did. Which of the following natural disasters have affected your home? So all over the map. Um, and this was a nationwide study, by the way. I don't know if I mentioned that. So how concerned are you that climate change will reduce your home term's long-term property value? So about 40%, 25 and 15, very extremely, are concerned about that, right? So it's not, you can see relative to what I just showed you with floor plans, it's not as ubiquitous, but there definitely is some concern from some. And interestingly, the concern wasn't higher or wasn't significantly higher in markets or with people that have actually had a natural disaster versus those that hadn't. And that may be just because we're getting natural disasters all over the place now, right? Tornadoes, fires, earthquakes, snow, you name it, we've had it, right? And so maybe everybody at some level feels a little vulnerable that could happen in their market too. I don't know, but has flood insurance availability cost impacted your decision to buy or sell a property? It has not, but I think that 21% is interesting. Not yet, but that I expect that it might. And I can tell you, I just trying to insure a home in Florida. To get hurricane insurance at all is very difficult and it's very expensive. It is making it much more difficult with all of the events that have happened in so many places. How concerned are you about the risk of natural disasters damaging a property you own? So about a little less than half are concerned, right? So some maybe think they're immune, or maybe they haven't had anything yet. They won't think that till maybe they've had something. I don't know. How concerned are you about rising homeowner insurance costs due to climate change risks? So 66%, so two-thirds are worried about that. I'm luckily I'm in California, which has all the fires, and Florida that has all the hurricanes, and between the two, our insurance has gone way up. I'm sure it probably has in some of your markets too. How concerned are you about potential changes in mortgage rates? There are some mortgage companies that look at flood risk, and which I don't think I know enough about why they do that, but there are people that are actually doing that. And about 40% are concerned about that too. So climate change, natural disasters, whatever we want to call it, it is definitely affecting consumers' perspective. And this I thought was really interesting too. And this I think is the most actionable for us. In your opinion, who should be responsible for disclosing flood risk? And you can see who it is. It's basically us, right? The real estate agent or the seller, and the seller would tell the real estate agent who would actually do that, right? So they think of it as the person that's working directly with them to be the one to disclose that. So again, it's a very politically charged issue because people that represent homeowners don't want to share them. The people that represent buyers do. And in MLSs, you offer both, right? How do you deal with that? But they're telling us that it is our job to give them information about what's going on with floods. So for what it's worth, you may want to look at what are you doing along those lines? Do you have flood maps? Are you promoting them? Are you doing anything? Are they on individual listings? I don't know. So then we asked them too about, there's all these, press these days about FEMA's going to get cut and things. How worried are you about that? About half the people are worried about that. But this I thought was interesting that if FEMA does get cut, people don't believe the state's going to be able to make up the difference. So only 20% believe that if FEMA cuts, go away or are significant, that the state's not going to be able to make it up. So there's going to be issues for consumers. And we asked this question too. So how much would the effect, now remember, these are homeowners, right? So they haven't bought lately, probably in most cases. Some of them have, but how much would, knowing that a home you're looking at's in a designated flood zone, like a high risk flood zone, is probably what we should have called it. Even though everything about the house was right, that, 45% said it would definitely affect their interest in whether they would actually purchase that home or not. So it's here to stay. Unfortunately, I wish we all could fix all these issues, but it is what it is. And then this was interesting too. There are times when homes side by side, sorry about that, side by side in the same neighborhood are affected completely differently. You've heard that where a fire hits 10 houses and it skips one and keeps going, right? Or a hurricane hits one side of the street and not another, or a tornado, goes right down the middle and hits a couple, but we've all heard those stories, right? So we asked them, how interested would you be in a sort of a climate risk index by property? Not the market, not the zone, but your actual property. And about 48% of them said that they would actually be very interested in that. So that's something else that we can look at as an industry. Should we be looking at ways to assign individual climate or natural disaster risk, or whatever word we want to use, at the individual property level. Not everybody wants it. This is very split, as you'll see. This is not as ubiquitous as the one for floor plans, but for those of us that are worried about homeowners, there may be some things that we have to think about there. Okay, so that's the research we had. That you'll see studies coming out about that, but again, you guys saw it first because that's what we promised you, and we're happy to deliver it. And now I'm going to talk a little bit about strategic planning, and I got a couple of other topics for you too. As always, I got 14 things to share with you. I could talk to you guys for 5 hours. So my first one is talking about strategic planning, and we did a governance survey. This was primarily to associations, not to MLSs, okay? But the topic is correct for both and is relevant for both. It's frankly relevant for all kinds of companies, technology companies, brokerages, consulting firms, all of us, right? But in the research, we found that about 85% of people in their strategic planning process develop some kind of overarching objective, but yet less than 4 in 10 actually say how they're going to get it done, right? So they don't have action plans. They don't have any sort of monitoring any measurements to say, did we do what we say we were going to do? And more importantly, if we did do what we say we were going to do, what impact did it matter? Did it make it on anything? Did it matter, right? So there's if any of you were at leadership last year, they used a great expression that I steal all the time, that they said, is your strat plan an elf on the shelf strat plan? Meaning you do it, you come up with a pretty poster, it hangs on the wall or it goes in a book, you close the door and you never look at it until the next 3 years come around and you have to do it again, right? Those kinds of strat plans are really exercises. They're not really strategic plans. That word is way overstated, right? I was formerly senior VP of strategic planning for a Fortune 500 company, so I know what it actually looks like, and we're just not really doing it as much as we could, right? So, how can we change that? Because you don't go anywhere if you don't plan. If you have great objectives, but you don't do anything to accomplish them, then they're just a piece of paper. They don't mean anything, right? So this was some other things we learned, that less than 15 or just about 15% track strategic planning progress monthly, right? So in other words, they're paying attention to it. Like, what are we doing? How's it going? Are we getting there or not? There's a bunch of people that look at it annually, occasionally, a few never even look at it at all, right? So that's not real strategic planning, because execution is where strategic planning matters. It's not the day. It's not the, as I call it, the forced family fun day where we get in a room and talk about stuff. It's afterward, right? And so what is a key performance indicator? That's a corporate buzzword, or KPIs, as you might heard it called. But here's the way kind of I look at them, and these are the kinds of things when you're doing strategic plans, when we do them, especially we bake these in, right? So the first thing is, it's got to be something that's measurable. We used to have 25% of our members participated in education, and our goal is to get to 30, and how are we doing, right? That's an example. They have to be actionable. It's like, it's got to be something you can do. It can't be things that are so generic, like, we're gonna create more opportunities for people to buy homes. I don't know, something generic. There's a lot of them that are very high level like that. Become the voice of real estate. Like, what does that mean? Right? It's got to be, okay, we're going to work with these particular reporters on these particular topics, on this particular cadence, and then we measure, we did some action, how did it work, right? And they have to be easy to understand. Sometimes these things get so highfalutin, as my grandmother would say, that nobody knows what you're talking about, right? Some people don't even know what the word key performance indicator means, never mind. Basically, a key performance indicator is nothing more than a measurement tool to say, did we do what we said we were going to do? And if we did it create any impact, right? That's really what it is. Did it move the needle in some way? And if it didn't, then that's why it's important to stay close to it, because if you're doing something and it seemed good at the time and you start going down the road and you see nothing change, you see no more engagement, you see no more interest, you see no more satisfaction, you see nothing moving, then it's probably not the right strategy or not the right action item, and you got to dump it and get something else, right? And so what we like to talk about is doing what they call agile strategic planning. Something that software developers use all the time, because if you're doing a 3-year, most of them are at least 2, if not 3 years long, right? So that's 12 quarters, right? That's a lot of stuff. And if you try to show or talk about something that's going to be done in 2027, in June of 2024, it feels so out far away. It doesn't feel realistic. You just kind of don't really get there, right? But if you break it down into short-term goals of like, what are we going to do in the next 120 days or no, next 90 days, right? Next quarter. And I outline what those goals are, what piece of the larger goals that you're going to try to attack. And then, at least on a quarterly basis in your boardroom, you can look at them and go, what did we do? So how did Q1 go? Okay, great. How did Q2 go? Great. What are we going to do in Q3? Then at the end of Q3, how did Q1, Q2, and Q3 go, right? So you continue to monitor, are you moving the needle in the directions that you want to, right? So this isn't just a one and done, we do it, it's pretty, it's cute, and then we move on. This is something that actually becomes the operating guide of the organization when it's done right, right? And then it really helps you understand when you set a strategic goal, it's got to be measurable. It's got to be something that's not so high level because there's no way to know if that's working or not. So how do you congratulate yourselves or share with your membership or with your MLS subscribers if you don't know what you're measuring, right? So you have to measure what matters, and then you got to be able to share that information. And here's something else that we're learning. I'm working on a few programs like this right now. It's fascinating that, and some of you may have read an article I wrote probably, I don't even know, a year ago now. Why are so many great association executives getting fired? It was created quite a stir. But the truth is there are a lot of great association executives getting fired, and probably some that aren't great too. Let's be honest, nobody's perfect, right? But what happens is people are getting evaluated on not relevant or not quantitative issues. They're like, well, I don't like you, or we don't get along, or I don't like your style, or they're things that are very subjective, right? If you use key performance indicators and you use the strategic plan as the guide for that, then you're holding your CEO accountable to the things that you have deemed to be most important for the organization, right? So you can build performance reviews around how well did the CEO and the staff execute something? What kind of results did it create, right? So did they get it done? How well did they get it done? And then what did it do, right? So if we launch, I'm making it up, 10 new education programs, right? When did we do it? How well did we do it? How many people attended it? And then what kind of feedback are we getting on them? And then does it change the overall perception of, wow, my association, my MLS is really serious about trying to help me be better at my job and be more successful, right? So that's frankly, a much more legally viable way, much safer way, but also a much more relevant way to evaluate CEOs. So if they're not doing these things, you've got it well quantified, then you can say, why is this not done? Why is this not done? What's happening with this, right? It gives you a lot more specifics to give feedback that's much more actionable. And if someone's really not doing it, you've got very good documentation to show why, not just some random perception that has nothing to do with their actual job performance. So definitely some things to think about if you aren't doing it that way. Okay, so one fun thing. I think it's fun. I don't know. I'm a geek though, so maybe you guys don't. But AI, of course, is everywhere. We're hearing so much about it, and that word is it's like kind of the days when the internet became a thing. For those of you like me that are old enough to remember that rollout, it's the same kind of thing, right? But I saw something fascinating with one association that I wanted to share with you guys on a group that's reinventing customer support, not only for the association, but for the MLS using AI. And it's working really well. So there's a company called Artie or Voice Flip, and they're working with the Greater Rochester Association of Realtors in Rochester, New York. Some of you may know Jim Yockel. He's a great guy. And he's put together a program that, in fact, if you want to click on the QR code, you can download I just wrote a little paper about it because I thought it was so fascinating about what they're doing. You can go get it free from our website. But he basically took all of the most important, or I shouldn't say even most important, most prevalent questions that he got first on the association side. So things like, what's the yard sign regulation in this particular neighborhood, right? So some of these things are not like life-changing, but there's a million small little questions like that are in association somewhere in a database on somebody's desk, right? And in order to find that, historically, someone would have had to have called you right? Or texted you or emailed you or whatever. They would have had to like reach out. With this stuff, they can just type in what's the, yard sign regulation in Falcon Ridge Estates, and it pops it right back up. And they can do it via WhatsApp, they can do it via text, they can do it via website, they can do it all different, whatever format is comfortable for them, right? And what they're finding is fascinating. One is that I think something like 40% of their members have used it, and 25% use it like every week. Like they're very involved with it, right? But the other thing they're finding is I don't remember the exact hours, but say it was 8 to 5 or 9 to 5, something like that, the normal hours that many of you are probably open, right? And before they launched this, about 90% of all the calls or all the information they received was during those work hours. Problem is, agents don't work just those work hours, right? Agents work 24/7. So with this system, it's now flipped completely where almost 75% of the outreach they're getting is after hours. Because when is an agent filling out their paperwork, or when are they trying to, get their disclosure documents figured out, or when are they trying to put their listing agreement together? Whatever. A lot of times it's not during the day, right? They're out talking to clients during the day. So this thing's fascinating. And again, it's just one of many. But it's one that's specific and real and actually being done in our industry. So I thought it'd be worth taking a look. So again, take a look at that. If you want, just grab that QR code. If you don't want to do that, just email me and I'm happy to send it to you, or just go to the website and look for it. So yeah, that's what I got for any comments that you guys want to hear about that we haven't talked about. Don't see anything coming in. Okay, well, I know it is the happy, we're heading into the 4th of July, so everybody have a great time. If you need anything, we will be sending this out as a recording, so feel free to share it with those that were not able to attend today. If you need anything from me on any of the topics we talked about today, I'm Marilyn at WAV Group, or you can call me at 805-748-9118. Okay, thank you so much, everybody. Have a great summer, and we will see you in a quarter.